Looks like everything's going splendidly at the investment bank, looking at the rates business, looking at the FX business. Just how strong a quarter was that, and can that momentum continue?
If you look at our performance in effects, you have to look at the base. Q2 17 was a very weak quarter in terms of volatility. You remember was quite challenging. So in the second quarter this year, we had a more normalized environment, but also we had the effect of gaining market share because of our rolling out of our electronic execution engines, and I'm very pleased with the performance of our IB and particularly the FX and FRC businesses.
Was there any consequential market share won as a result of dislocation around the other investment banks?
No, I don't think it's. I don't think I would capture a thing. The competitive landscape is quite full and diverse, so I think it's not one or two players that makes a big difference if they slow down.
Talk to me about the clients. Are they taking a bit of cover? It's been a fairly volatile 6-7 weeks. Is there a sense of deleveraging from the clients?
There is. I think if you look in general, particularly when I looking at U.S. clients as a proxy to answer your question, it's quite interesting because they are still quite constructive about the future. So in terms of how they see the economy, the outlook. But if you look at their asset allocation, particularly on stocks, it's quite stable. And most importantly, if you measure compared to the third quarter of 17 till today, they had an increase of cash balances of 5% from to around mid 20s. So it's quite interesting to see that they are constructive, but on the other hand, they are not really moving their portfolios a lot. They are quite focused on maintaining their positions, and so which is not good for transactions, and they are increasing their cash balances.
Net new money is a debit item. So the market is going to want to understand from you, is this a one-off anomaly? I know you break it down, but you set some targets on net new money. This is going to disconcert the market today. Yeah. So talk me through your thinking on it.
Well, I think that if you look at, first of all, I have to say that we are reiterating that we believe we're going to achieve our 2 to 4% target for the year. We were not going into big victory laps with a fantastic first quarter on net new money. This quarter had some seasonality effect. The tax outflows in the U.S. were expected. We had a one-off outflows from a corporate that transferred their employee stock option plan, which is an interesting business, but it's a low-margin business. We had almost no effect on leverage, on lending, so clients are very cautious. But we also had a very good signal of a good momentum. Same store financial advisor net new money was up threefold compared to last year. Outside the U.S., we had almost 6 billion of net new money. So overall, I'm still positive about our developments, and we don't look at net new money on a quarter-to-quarter basis. And I'm quite confident that the rest of the year is going to be okay.